I'm going to tell you about a stock that completely fell apart and then came back like nothing happened. Intel, one of the most iconic names in tech. The stock went from around $68 in early 2021, all the way down to $18 in September 2024. And then it went back to $65 in about 18 months. That's roughly a 3.7x return from the bottom. And I did absolutely nothing. No buying, no trading, just watched. And honestly, I'm glad I did. Because if you think this is a story about missing money, you're about to miss the whole point. Now, just a heads up. I'm sharing my personal journey and the system I use for my own money. I'm not a financial advisor, so please do your own research or talk to a professional before making any investments. To understand what happened, you need to understand what Intel was. For decades, they basically owned the computer chip market. At their peak, Intel held close to 80% of the CPU market. If you had a PC, it almost certainly ran on Intel Silicon. They were printing money. But somewhere around 2018, cracks started showing. They promised a new generation of chips and kept delaying, year after year. Meanwhile, AMD, the company everyone had written off, started eating Intel's lunch. The Ryzen chips were faster, cheaper, and more power efficient. Then came the AI boom. And the chip company that captured it wasn't Intel, it was Nvidia. While Nvidia's stock was going parabolic, Intel was going nowhere. By September 2024, Intel stock had collapsed 60% in a single year, hitting $18.25, their worst level in over a decade. And in December 2024, the board ousted their CEO. Revenue had stalled. Profit margins collapsed from 55% down to about 35%. They were burning through cash trying to compete with TSMC, and they were losing. Now here's where it gets psychological, because when I saw Intel at $18, my brain didn't stay quiet. It started making a very convincing argument. First thought, this is a bargain. It was $68 before. It's $18 now. Like finding a $68 shirt for $18 at the clearance rack. Second thought, this is Intel, founded in 1968. Companies like this don't just disappear. Third thought, the sneaky one, Reddit threads, YouTube videos, analysts all saying Intel is undervalued. Suddenly it feels like consensus. But here's the thing, none of those thoughts are logic. They're just FOMO, the fear of missing out, wearing a suit. And FOMO is the most dangerous investor in the room. FOMO doesn't show up when stocks are at all-time highs. It shows up when something looks broken, but fixable. That's the trap. So let's actually look at what Intel's number said at $18. Not the story, the facts. Intel's revenue had been flat for 3 years. Meanwhile, Nvidia's data center revenue went from about $3 billion to over $47 billion in the same period. Gross margins went from 55% in 2020 down to about 35% by 2024. Shrinking margins mean less money for R&D, which means falling further behind. Intel was spending 25 to 30 billions per year in capital expenditure, trying to build foundry factories to compete with TSMC. Massive bet, no guaranteed payoff. Risk is something you can measure. Uncertainty is something you can't. Intel at $18 wasn't just risky. It was deeply uncertain. That $18 price tag wasn't the market being irrational. It was the market saying, we genuinely don't know if this company wins. Price reflects that uncertainty. Stock that looked cheap can keep getting cheaper for very good reasons. Some of the most expensive looking stocks in history turned out to be the best investments. Quick pause. If you're getting value out of this video so far, take 1 second to hit the like and subscribe buttons below. My goal with this channel is to help you build real wealth and avoid the financial traps that keep most people stuck. Let's get back to the video. Now, here's where the story gets interesting, because something really did change for Intel, and it changed fast. In March 2025, Lip-Bu Tan became CEO. He came in and immediately started cutting management layers, bloated processes, unfocused projects. Focus restored. The U.S. government backed Intel with $8.5 billion from the CHIPS Act because keeping advanced chip manufacturing on American soil became a national security issue. In September 2025, Nvidia, your competitor, bought roughly 4% of Intel at $23 a share. When your biggest rival invests in you, people pay attention. Intel's most advanced chip manufacturing process, called 18A, started actually shipping, and Microsoft signed on as a customer. The foundry dream was becoming real, and the market responded. From $18 at the lows, Intel climbed to $30, then $40, then $50 by April 2026, near all-time highs. Intel's market cap went from around $95 billion at the lows to over $300 billion by April 2026. That's a massive swing in how the world values this company. If you'd bought $10,000 worth of Intel at the September 2024 low and held through April 2026, you'd have roughly $36,000, a 260% gain. And this is where most people's brain goes into pain mode. They look at those numbers and think, I should have bought. I knew it was cheap. But here's the thing about hindsight. It makes everything look obvious in reverse. In September 2024, buying Intel felt genuinely terrifying. Between late 2024 and mid-2025, the stock barely moved. There were months where it sat in the low 20s. Most people would have sold out of boredom or fear long before the recovery. So I had one moment of regret, and then I stopped and asked myself something different. Not why didn't I buy, but what game am I actually playing? Most people don't realize there are two completely different games being played in investing, and they look almost identical from the outside. Game one is what most people think they're playing when they buy a fallen stock. You're trying to catch the bottom, predict the turnaround, and exit at the right moment. To win game one with Intel, you had to be right at least 4 times. Right about the bottom, right about holding through uncertainty, right about the recovery, right about when to sell. Research on investor behavior consistently shows that retail investors who buy recovery plays significantly underperform the very stocks they buy because they bail too early or buy too late. There's a line that stuck with me. The stock market is a device for transferring money from the impatient to the patient. Intel at $18 was a perfect test of patience. Game 2 looks boring from the outside. You buy broad market index funds. You contribute consistently. You don't try to pick winners. You let the market do it for you. Let me show you a version of this story where you did buy Intel. Same good intentions, same research, very different result. Let's say you spotted Intel dropping in mid-2024 and bought in at $30. 3 weeks later, it's at $25. A month after that, $20. Now you're down 33%. The news gets worse. CEO fired in December. Do you hold? Do you buy more? Do you cut your losses? Most people freeze, then panic. 6 months in, still in the low 20s, CEO gone, uncertainty everywhere. You sell. You've lost about 40% of what you put in. And then, from the sidelines, you watch it climb. $25, $35, $45. The news gets better. You already sold. You don't benefit from a single dollar of the recovery. Some people made 3x on Intel. I'm not going to pretend they didn't, but for every person who timed it right, there are dozens who bought, panicked, and sold at the bottom. And I'm not saying this to make you feel bad. I've been there. I've sold things I shouldn't have. The pain of regret in both directions is real. The day I stopped trying to find the next Intel, the next big turnaround play, was the day my investing actually started working consistently. Here's what I actually do. I invest in broad market index funds. I put in money every single month automatically, and I ignore the noise. Here's what people miss. While Intel was collapsing, Nvidia was exploding. If you held a simple S&P 500 index fund, you owned Nvidia the whole time. You didn't need to pick it. $500 a month for 20 years at 10% annual return. Roughly the S&P 500's historical average gives you about $343,000 from $120,000 contributed. And here's the kicker. Because Intel is in the S&P 500, my index fund captured part of Intel's recovery anyway. I didn't need to pick it. It was already in my basket. But if Intel had kept failing, if it went to zero, my index fund would barely have noticed. Intel is about 0.5% of a diversified portfolio. One company cannot sink the whole ship. Here's a mental model I keep coming back to. Judge your investment decisions by the process, not the outcome. A bad process that gets lucky is still a bad process. So, Intel fell from $68 to $18. It recovered to $65. Most people either missed it completely or bought and sold at the wrong moment. The index captured part of it anyway. So here's the actual twist. Missing Intel at $18 wasn't a failure. It was proof that I'm sticking to my system. And in investing, that is one of the hardest things to do. Discipline through temptation is the actual edge. Because the real danger in investing isn't missing opportunities. It's changing your whole strategy every time you see one. That's how portfolios get destroyed. 3 things from this story. 1. Cheap doesn't mean undervalued. 2. Single stocks are bets, not investments. 3. Discipline is the only real edge regular investors have. The goal isn't to catch every win. It's to build a system where you don't need to, where the market works for you, not against you. But I am curious. We all have a version of this story. A moment where a major opportunity looked like a broken trap, or a time you watched a massive recovery happen from the sidelines. What was that moment for you? Did you stay disciplined and stick to your system, or did you let FOMO take the lead? I'd love to hear your experiences in the comments. I read every one of them, because whether it's a global tech giant or a simple index fund, the lesson is always the same. The numbers will fluctuate, but your discipline has to remain a constant. Intel went from $18 to $65. I did absolutely nothing. No regret, no stress, no second guessing. Just my system, running quietly in the background. If you've ever felt like you missed a big opportunity, you're not alone. But the goal isn't to catch every wave. It's to build a boat that stays afloat no matter what. Subscribe for more honest investing content. No hype, no stock tips, just how money actually works. I'll see you in the next video. Keep building.